We're now looking at costing methods. Now, what we have to be careful about here is that we are still using either absorption or marginal costing. Having said that, when we look at costing methods, we are almost always assuming that we are using an absorption costing methodology. What we're now trying to look at are the specific type of method used by an individual industry or sector of the business. So if we were looking at costing methods, there are two basic ways of considering them. Firstly, we have what we may describe as specific order costing. And secondly, something called process costing. If we're looking at specific order costing, we can separate this into two, something called job costing and something called batch costing. Finally, we have to be aware that there is something called service costing. I suppose what we're highlighting here is that we normally look at costing methods as though we are producing a product. But of course, any of job, batch or process could be used in a service costing environment. Typically, when we look at service costing, there are some specific issues that we have to be ready for. So I suppose we might as well kick off by looking at what is specific order costing all about. Well, the simple deal here is that specific order costing is where we can separately identify the product at all times. So the product will be passing through a number of individual operations, but at all points we are able to separate that product from any other product. I suppose what we're looking at here is a situation where maybe different products are being produced within the same operation. So, if we looked at job costing first of all, job costing arises where we have a unique product. This means that it is normally requested by the customer. They come to us with their specification, and then we go back to them with a cost, and hence a price, associated with our estimation of how much it will cost us. So, it is a unique product. It is to a customer specification. The sort of examples we could talk about here. In London, there is a road called Savile Row. In that road, there are tailors, people who make made-to-measure suits. Of course, I don't have a made-to-measure suit, but somebody with a lot of money may have one. In that circumstance, the suit is designed for their curiously shaped body. So any form of made-to-measure tailoring. Another example, something slightly different. Maybe you're looking for a fitted kitchen, and the whole point about a fitted kitchen is, yes, that it fits, that you put, I don't know, the fridge in one place and the oven in another. So these are the sort of things that we're talking about. Now, given that it's a unique product to a customer specification, there is no general price for it. Instead, the price will have to be determined from the cost. So it won't surprise you to know that we're looking at cost plus pricing. To a certain extent, we've already dealt with all of the issues with job costing already. Because when we looked at absorption costing, we were assuming that it was a job costing type environment. So the maths associated with job costing is going to be more related to dealing with margins or markups than anything else. And of course, that has already been done. Secondly, when we look at specific order costing, we could look at batch costing. When we look at batch costing, we will have a number of similar units of production, but they will be in a batch of 10, 100, 1,000, and that batch taken as a whole is unique. A unique batch of identical products. Now, of course, this could be done on the basis of a customer specification. Or alternatively, it could simply be a way that the process is run within a factory. The sort of examples that we could look at there. Well, my favourite example is that if we look at any form of printing. If you're a company and you want some headed paper with your name, address and your VAT number, that would be a classic example of batch costing. In simple terms, there's not much that the examiner can deal with here that we haven't already dealt with. And if you think about it, when we're looking at batch costing, it's going to be exactly the same as job costing, but to get the per unit cost, we would have to divide through by the number of units in the batch. Moving on. The main event of what we want to talk about is something called process costing. Process costing arises when the units are not separately identifiable. So in simple terms, what we may have is some sort of material input going into a process. And we will get some sort of output from the process. And of course, we're going to apply what we're going to learn to call conversion costs. These typically would be labour and overhead, although there could be other elements of material as well. They're called conversion costs for the simple reason that we convert the material inputs into the material outputs. The reason why we need something called process costing is because in the process we are unable to separate one unit from another. And the classic examples of process costing relate to homogeneous products, typically liquids, or low-value items where it would not make sense to separate the cost of one from another. So if we were going to come up with a couple of examples for process costing, maybe we could talk about paint manufacture. When you're mixing paint, you're not going to separate 1 litre of paint from the other. And as such, in process, we cannot separate the cost of 1 litre from another. We could discuss such things as oil refining. You pour some crude oil into the front end of the refinery, and out of the back end of the refinery you'll get such things as petrol and diesel and heavy fuel oil. Again, in process, it's all mixed together and you cannot separate 1 litre or 1 barrel from another. I said we could talk about low-value items where theoretically we could separate the cost of one from another. I hope we all know what a paper clip is. A small piece of metal. If we really wanted to, we could separate the manufacture of one paperclip from another. But given that a single paperclip is worth less than 1 penny, it is highly unlikely that we would want to do that. So what we want to do here is to find some way of valuing our outputs. Remember, so much of this course is about establishing a cost per unit. And what we want to do is we want to, well, establish a cost per unit of this, given that we know the inputs in material and the application of the conversion costs. In simple terms, there is only one way of doing it. For a period, given a day, a week or a month, we know the total material inputs. We know the total conversion costs. And so all we're going to do throughout process costing, however complicated it may become, is to average the cost over the output. Our aim is to establish an average cost per unit of output. If we remember that all the way through what we're doing now, we're not going to have a problem. Because not surprisingly in a topic like this, there's going to be quite a lot of bits and pieces designed to confuse. Don't let that happen to you. Let's look first of all at the sort of things that we would have to consider. The first issue is something called normal loss. When you're making a product in a process, it's possible that you expect, as part of the process, to lose some of the input. We've talked about oil refining. If you're looking at oil refining, you're pouring crude oil in at the front end, and out of the other end comes all of the component outputs. But at the same stage, you're probably not going to be able to use all of that oil. I don't know if you've gone past an oil refinery, but what you often see is that they flare off the bits that they don't want. And they also have to remove some of the sulfurous elements if they possibly can. Okay, I'm not an expert on oil refining. If that's the case, we expect the normal loss to occur. So if you are going to discuss normal loss, the two things that I would say about it is, one, it is expected to occur. If you wish, it is expected to occur during efficient operation. However good we are, the normal loss will arise. Secondly, it is a part of the process. If you wish, it is inherent to the process. We cannot avoid it, even if we wanted to. If that's the case, we don't want to place a value on the normal loss. Not as an output, anyway. What we want to say is that, given that we expect to lose some of the units, what we want to do is to make sure that we charge all the costs against the expected output. So if we look at the accounting treatment, we'll simply say normal loss is not valued as an output. Maybe what we should do now is to look at a simple example. Let's take an example. First of all, we have our input. If you wish, our input in materials. It's critical that we know the number of units of input. Here, 2,000 litres. 2,000 litres, $3,600. In addition to the material inputs, of course, we have the conversion costs. The conversion costs in this case are labour, $300, and overhead, $600. Normal loss is 10% of the input. We'll start with an example where actual output is 1,800 litres. Now, of course, what we're going to do is slowly develop this example bit by bit to add further complications that may arise. But to begin with, what I want to do is to just set the scene. Because when we look at process costing, we're looking at the use of T accounts, or a specifically modified type of T account. We have our process account. Now please note that when you get some questions, you will have one process running into another. So the output from process 1, say, becomes the input to process 2, and so on through the processes. It's quite normal in process costing to come up with some sort of sequential arrangement, 1 to 2 to 3 to 4. The key issue with the process account is, of course, we are looking at value. No problem with that. But we also have a column associated with the units, in this case, litres. We could talk about the process account in terms of debits and credits, but at the same stage, it's often very useful to look at the process account most of the time in terms of inputs arising on the left-hand side as a debit and the outputs on the right-hand side. If we think of it that way, we can talk about a flow during the period. And my simple rule with process costing is that it's like a rule of physics. No matter can be created nor destroyed. So what comes in as a debit must go out as a credit. If we remember that, we're going to have a very easy time of it dealing with any question that the examiner throws at us. When you look at a process costing question, one of the first things you want to do is to understand what is happening with the units. If you notice here, we have a material input. We said the material input was 2,000 litres. Now please note here, we've also got labour and overhead. But they are conversion costs. They convert the inputs into outputs, so they are not measured in unit terms. What outputs do we have? Well, one output that we have is a normal loss. We are told that 10% of the input is expected to be lost in this way. If we were to take 10% of 2,000, even with my appalling maths, that comes to 200. Luckily, with this simple example, we see that the actual output was 1,800. So this is very straightforward indeed. When we balance them up, we have 2,000 litres coming in, and we have 2,000 litres going out. Of course, with more complicated questions, we're going to see something slightly different. But if we balance the inputs and outputs in this way, we get a feel for what is happening that allows us to do everything else within the process costing question. Now, we've already established a rule here. Without thinking, we've already said that we wanted an average cost per unit, but we wanted an average cost in relation to the expected units of output. So if you think about it, couldn't we say that our cost per unit is going to be the total input costs divided through by the normal output? Oh, hold on a moment. What do I mean by the normal output? Well, the output is simply going to be the input minus the normal loss. If we were to do the calculation here, couldn't we do something like this? Our cost per unit we simply list out the costs. 3,600 plus 300 plus 600. We have the material cost plus the conversion cost, labour and overhead. The normal loss, we said, was 200. Therefore, to calculate the normal output, we take the input 2,000 litres minus the normal loss of 200. So what do we get? The total input, 36 plus 300 plus 600, comes to 4,500. Divided through by the normal output, 1,800, and hey presto, we end up with $2.5 per unit. As we will see in a moment, we didn't actually need to know that figure. But this is a classic calculation that we will have to develop as we go forward. So, can we value up our process account? We've already got the inputs and outputs in unit terms. Now what we want to do is to dump in the value. 3,600 for materials, 300 for labour, 600 for overhead, a total of 4,500. We said that normal loss is not valued as an output. So here we would give it 0 value. And if we were to calculate the actual output, we would take 1,800 litres multiplied by $2.5. And I think you can appreciate that we didn't have to do that because we had this value already, 4,500. But let's get into good habits before we get into the bad ones. So, we've dealt with normal loss. The next step is to consider what would happen if the normal loss had some other value. So now we look at scrap value. You see, in the first example, we looked at a situation where the normal loss just disappeared. But in many examples, although the litres are lost as good output, they still have some worth, some reduced worth. This is what we describe as scrap value. Now, given that that is the case, do we want to treat the scrap as an output, something that we sell in its own right? Well, the issue is that it is not the main reason for doing the process, and we don't want to spend too much time doing this. So all we want to do is to treat it as though it is residual income, another income source. But hold on a moment. If we have this income source, couldn't we argue that the scrap value should offset the costs of the process? Well, that's what we do. Therefore, normal loss is valued in scrap value terms reducing the process costs. All we're doing is offsetting the scrap value against the process costs that we're incurring, and as a result, we can reduce the overall cost per unit that we suffer. If we were to look at an example with scrap value, maybe the easiest thing to do would be to start with the example that we already have. If you remember, we had an input of 2,000 litres, $3,600. Conversion cost, labour $300, overhead $600. We said that the normal loss was 10% of input. But now what we're going to say is it's 10% of input, which may be scrapped for 90 cents per litre. So, yes, we lose the good output, but we do benefit to some degree from the scrap. Actual output, again, is 1,800 litres. So how are we going to deal with this? Well, the first thing I would like to point out is that the inputs and outputs in unit terms do not change. So if you wish, I've left them as they were before. But when we come to calculate the cost per unit, we now have to revise our formulae. Before, the cost per unit was where we took the total input costs and divided through by the normal output. And of course we know the normal output is the input less the normal loss. Because we are now going to offset the scrap value against this, we have to take away the scrap value of normal loss to illustrate the fact that it will reduce the unit cost of the output. Let's see how it works. If we were looking at the cost per unit using the numbers that we already know, we know that the input costs were 3,600 for the material, plus 300 for labour, plus 600 for the overhead. From that, we wish to offset the scrap value of normal loss. Now, we've already said normal loss was 200 litres. So we have 200 litres, each with a scrap value of 90 cents. If we divide through by the normal output, which we already know is 1,800 litres, what do we get? Well, we have $4,320 divided through by 1,800 litres, and that gives us $2.40 per litre. We have our cost per unit. Please note, slightly lower than before, but not surprisingly, because we've offset the scrap value. Okay, once we have our cost per unit, we can easily go and fill in the rest of the process account. If we're looking at materials, 3,600, labour 300, and overhead 600. Total input costs of 4,500. Normal loss. Well, we said normal loss is now valued as scrap. 180. 90 multiplied by 200 if you wish. 90 cents, that is. Actual output. Well, before it was 1,800 litres at $2.5. Of course, now it's at $2.4, and that gives us 4,320. Abracadabra, it balances. Just a thought. What happens to the scrap? Well, in the first instance, we would charge it to what you could call a normal loss account, but I'm always inclined to call a scrap account. You could just look at this in dollar terms, or if you wanted to, you could keep track here of the litres. It's up to you. Some people think it's useful to keep track of the litres, and others think it's a waste of time. I suppose we have to talk about double entry here. What we've managed to do is credit the process account. Therefore, we would debit the scrap account to $180 from the process account. What's going to happen to this? Well, the fact is that we're going to dump off this scrap. We're going to sell it to somebody. Please note the sort of people that you sell scrap to, I wouldn't necessarily accept a cheque. I want cash. So let's put it through bank. Okay, we've got to a position now where we know how to do the basics of process costing. The key working we already have in front of us. Because with the simple process costing questions, it will never get more complicated than that. If you can calculate that cost per unit, you are home and dry. Now let's go back and think about other things that may arise. So if we go back to what we were discussing before, now we can look at something called abnormal loss. We talked about normal loss as being part of the process. We talked about normal loss as being expected. If that's the case, abnormal loss is going to be the other bit. Presumably, this is unexpected. During efficient operation, we do not expect to make this loss. So I suppose what we're saying is that it's due to inefficient working. It's due